Welcome back. ACC reported numbers overnight. The numbers look good. There was a sharp improvement in the company's profitability. The stock is up close to about 1%. But Ultratech will be reporting numbers later tomorrow. So let's find out what the sector outlook is and the view on ACC. We're now joined by two gentlemen, Navin Sahadeo of Edelweiss and Rajesh Kumar Ravi of HDFC Securities. Navin, let me start with you. Are you surprised by the reaction that we've seen on ACC? The stock is only up 1%, and considering it's trading at a valuation discount to the industry average, did you think the stock, would have opened up and, done a little better in trade?
So if I'm not wrong, I think the stock did open up, I think almost about 3.5%. But as you rightly said, it's up as of now. It's up just 1% or so. I would have loved to see it, a much higher upside, given the massive beat it had reported in the numbers yesterday, especially realizations, phenomenal.
Rajesh, what is the read-through for the other cement companies which are still to report numbers?
Yeah, hi, good morning. We expect that, profitability will be strong even for most of the other players in this quarter, because demand has been, quite resilient. Retail demand has been on a positive trajectory, and for the sector as a whole, as we have seen in ACC, a flattish volume growth. Overall, for the industry, we are expecting that there could be a, marginal growth, YOY. So, and even pricing has been quite robust. Post the hike that was seen in 1Q, there has been only seasonal correction in 2Q. South-based players have strong, price recovery in this year versus YOY. So overall, and players in North Central market, they were already enjoying high prices last year. Even those prices are sustaining in, this monsoon quarter. And given that the cost also have been on the positive side for the industry, we should see strong numbers for on an overall basis for the industry.
Navin, just to come back to the point that Rima was making, so what are we missing? Numbers are a massive beat, as you said. This is not a market which is shy about rewarding stock prices, especially with for companies which do what ACC has done. So it's up 1%. I know it's very short term, and it's not a down market today. So is there anything we're missing roundabout?
No, I don't think there is anything amiss from a result perspective or what the company brings to the table, and also more importantly the read across, because the read across was obviously positive on all three counts, be it volumes, be it realizations, or be it controlling the fixed cost. This is just a broad guess. I think what broadly the street could be waiting is for the demand momentum to sustain, because September, I think the overall industry not just turned positive, but is expected to have, given a near higher single digit kind of a growth, which is a welcome comeback. So I think there could just be some skepticism whether this demand is sustaining, and this is what precisely then throws up the opportunity, right? That if these numbers indeed do sustain, and which is what the channel checks do indicate, that October volume seems to be holding up or in fact improving, and also the fact that the volume the run rate that you're seeing in October is on the back of price hikes that has happened recently, or price recovery that has happened recovery. I think there is definitely scope for further consensus upgrade, and hence the current trend or the current stock price should be viewed as an extremely attractive opportunity. 8 and a half times 1 year forward EV EBITDA for a stock like ACC, I think it's a extremely lucrative kind of a valuation. Definitely investors should dip into it.
8 times EV by EBITDA, and compared to, say, where it usually trades over the last, say, 10 years or so, how does this compare, Navin?
Yeah, so the range has been around anywhere between 9 to 13 times. In the last, let's say, 5 to 7 years average, or the average EV EBITDA band for a company like ACC has been around 9 to 13 times. So against that, I'm saying, because I'm talking about these 8 times EV EBITDA on the forced upgrade that we have had to see on the stock front, as in 2,800 crore kind of a EBITDA estimate. On these estimates, the stock trades at 8 to EBITDA. And mind you, almost 250 rupees per share is the cash on books. So there is every reason not to ignore this opportunity on a stock like this, because just some more comfort whether this demand is holding up or not can drive up massive outperformance, or near term there are gains to be made on the stock. I'm pretty much optimistic on that.
Rajesh, so 8 times EV to EBITDA for ACC on a forward multiple, as Navin pointed out, it's still trading at a big discount to the industry average, right? I was reading somewhere the industry mean is closer to that 11 times. So what is the reason for ACC to trade at this discount? What can it do? What does it need to deliver for this valuation gap to narrow down, or for ACC to catch up vis-a-vis its peers? What are your channel checks suggesting? Is demand sustaining, not just in October, which is, like a run up to festival season, etc., but even thereafter?
The valuations front, yes, ACC has been, lagging compared to other large cap peers and even to Ramco Cement. So it has been there, the low valuations which ACC and Ambuja has seen over the past many years is largely driven by the lack of investment opportunities which these two companies have seen. They have not expanded capacities, have been losing market shares, and also there was not much excitement in terms of cost reduction strategies which they adopted. However, last 1 to 2 years after the material supply agreement was brought in force, and now that is being executed, on the cost side, both the companies are doing good, and and that is where, even if you see last 2 to 3 quarters consistently, ACC has been outperforming in terms of lower fixed costs, and overall costs have been a positive surprise for the on the street. So this is obviously one re-rating opportunity for ACC. Secondly, in terms of capex, obviously ACC has announced 6 million ton of capex, which is still on a back-ended phase. CY22 only those capacities will get fructified largely in the central market, and small grinding expansion in the eastern market. So for re-rating on the valuations front, I believe more market share gain opportunities for ACC and Ambuja could be a re-rating opportunity. For Ambuja, obviously, because their capacity in Rajasthan will get commissioned early next year, so that could be an another trigger for Ambuja to get re-rated. ACC may follow thereafter. So these are the two factors where they were missing. On the cost front, under the new CEO from ACC, Mr. Neeraj Akhoury, the companies have, Ambuja has spearheaded the material supply agreement with, more full force, I should say, and that will obviously drive re-rating for the companies, both the companies. On the second count that you asked, how demand is holding on in month of October, overall, if you see, there is an exuberance, not only in cement, even other sectors. You are seeing a lot of exuberance in terms of demand recovery. In cement, the non-trade, while trade demand continues to remain strong, the non-trade is the missing link in terms of RMC numbers for ACC. Even that portrayed a dismayed number, 42% decline. So, that recovery maybe from the urban side, real estate and infrastructure, that in the second half could be a key for the industry as a whole to, further beef of the utilization. So, COVID uncertainties do remain. However, things are on a recovery phase. Will it turn positive? Still, we don't have any data points to substantiate that. Obviously, there is lower pain. Our infrastructure analysts, real estate, what they see that there's a lot of labor reverse migration which is happening. People are working. The project execution is back to 90% odd level. So these are obviously good signs in terms of the non-trade side. So overall demand number even in second half should look much better compared to what we are seeing in 2Q on a YY basis.
Rajesh and Navin, thank you, both of you, for joining us and running us through what you make of the space and ACC in particular. Appreciate it. We will take a very quick break here. The market is looking up 70 points now. So I mean, it's better than when, I mean, it's 25 points better than when we started at 11 o'clock. So up and up, 11,940. We are back with more in just a bit.